Hi, everyone, and welcome to this very exclusive conversation. Today, with me on the show is Julius De Kempenaer. He is the creator of relative rotation graphs, or RRG as we call it. This unique method is used to visualize relative strength within a universe of securities. It was first launched on Bloomberg platform back in 2011 and then on portals like StockCharts.com after a few years. And now Indian traders can also benefit from this revolutionary tool only on Strike. Let's bring Julius on board to talk to us in detail about RRG, its key features, and how it's a game changer for the trading world. Julius, great to have you with us on the show, and we're all very excited for what lies ahead. So talk to us about where did you come up with RRG? How did you come up with it? And just to give us some backstory.
Yeah, hi Karunya, and thanks for having me. I'm also very excited that we're now finally going to launch RRG in India. So your question is short, but the answer is probably going to be very, very long. So I'll try to, I don't know, give a little bit of a background of the story, how that all evolved. And in order to do that, I've got to go back to my time as an analyst on the trading floor of an investment bank. It was a Dutch investment bank, so our universe was European stocks, the Stock 600. That was my group of stocks that I had to analyze. And I was the only technical analyst, technical quant analyst. And that's a big difference compared to my fundamental counterparts, because when a fund manager or PM talks to the banking analyst, he knows he's going to talk about banks, right? I mean, and these analysts have like, I don't know, 20, 25 stocks. So that conversation was pretty boxed and everybody knew what it was going to talk about. For me, it was 600 stocks divided in 18 sectors. So my conversation with these people was broader and not as clear. So, obviously I couldn't prepare a story on 18 sectors, let alone 600 stocks. So I had to, sort of pinpoint what I was going to talk about with these fund managers. And, you prepare 3 sectors and a number of stocks, and you get into a conversation with the fund manager, and then all of a sudden, no, Julius, because I had prepared something like, I don't know, financials and food and beverage and whatever, something else. So I was going to start my spiel, my pitch, like, hey, John, you need to think about this sector. No, Julius, no. This week is technology week. We got Goldman Sachs coming over, and Morgan Stanley is presenting NVIDIA, and we've got this conference over there. So what are your best 5 stocks in technology? Obviously, I hadn't looked at technology because I thought technology wasn't interesting at the time. So I had to find something to put that on their radar, because if you're in that very professional and very competitive world, you need to have something that sets you apart. And the second thing was that all these guys are talking about relative strength. If you're a professional fund manager, your job is to beat the benchmark. It could be anything. Could be, in the US it's the S&P 500. In India it's probably the Nifty 50 or the NSE or some sector index. So their game is to beat the benchmark. And that's a game that is for retail traders often very hard to understand, because what it means is that a fund manager who needs to beat the Nifty 50 and he loses 5% of his money while the Nifty goes down 10%, he's still a hero because he outperformed the Nifty by 5%. Yeah. However, his fund lost 5%. So you're losing money, but you're still a hero. It's a difficult concept to grasp for a lot of retail investors, but that's what we're talking about. And the reason why that's happening is because these people are not allowed to move to cash. If you're running your own money and you don't trust the market, you just take it out and you put it on cash. And then you go back in when you feel the market's going back up. For a lot of these professionals, that's not the case. They can't do that. They don't have the liberty in that fund. So 2 things that, I was always thinking about stuff, but, things that you had to kind of come together. And the first thing that came up, because the question that I got was like, what are the best 5 stocks in technology? And obviously I didn't know what the best 5 stocks was, and how are you going to do that? So what I needed to do is come up with a ranking system to be able to answer that question. What are the best 5 stocks? And it's a long story, but eventually that became the RS ratio, the JDK RS ratio. And it's a metric that measures trends in relative strength. And you got to know one thing, because a lot of people use relative strength. It's a very common indicator in the industry. But the problem is that the raw value of relative strength, which is basically the price of a sector divided by the price of a benchmark, or the price of a stock divided by a sector index, is just a number. And that number, that numerical value, you cannot compare that across a universe. You need to know the direction of the trend, because the relative strength value is outright determined by the price levels of the sector and the index. So if a sector is trading at a very high level, you will get a very high reading of relative strength. And if a sector is trading at a very low level, you get a very low reading of relative strength. But it's very well possible that the low reading is actually moving up, and the high reading is moving down, and you want the one that's going up. So you've got to come up with some sort of a metric that detects the trend and makes it comparable across the universe. And that's what eventually, after some iterations, the RS ratio is doing. And that was my first bit of what is now RRG. And I used that in my work. I published it. I sent it to my clients. And I remember very, very well in back in 2000, the dot-com bubble, NASDAQ went to 5,000 and then came crashing down. Sorry about that. Obviously, there is a trend following component in that RS ratio. So back in the day, all these tech stocks were on buy recommendations, and everything was going up, and then all of a sudden it starts to come down, and so trend following models need a little bit of time to adjust to the market. And that's what happened. So I got an email from an Italian hedge fund manager, and he wrote me and said, "Hey, Julius, this time your model didn't work too well." And I was reading that, and I was like, she's right. Damn, what am I going to do with this? So back to the drawing board, start working. And then, as we know, momentum or rate of change is a leading indicator. The best way to compare it is if you throw a ball up in the air. In the beginning, it's got a lot of speed, and then after a little while, the ball is still going up, but at less speed. There is a static moment in the air, and then all of a sudden it starts to decline, at first at a low speed, and then it starts to accelerate. That is momentum. So I started to play around with that rate of change metric, and applied it to that trend metric. And then all of a sudden I had two values, and a sort of a kind of an early warning system. And again, the same problem arose which we had with relative strength in the basis, that the numerical values of these ROC values were not comparable. And I needed to compare it across a universe. So again, back to the iterations, back to the drawing board, and we came up with a way to try to normalize that reading and make it applicable across the universe. And that is now known as the JDK RS momentum. So I had two values. I was still publishing the reports, and I had my ranking based on RS ratio, and I had my RS momentum values, and I could play around with that. But it was a table, and investors, technical analysts, we're very visually oriented people. We'd like to see how things are going, and the table is just a snapshot in time. So I started to play around with those metrics and plot them on a chart, and then you can see the history of those two lines, which is interesting, but you can only see them on one chart. So you can see the relationship of stock versus sector versus benchmark. If you want to see another one, you need to flip to a new chart, and you do it again and again and again. But if you want to answer the question, what is the best or what is the worst, you need to have a bigger picture. And again, RRG wasn't born on the kitchen table on Sunday afternoon. It takes a little bit of time. And at some stage, I was working on my reports, and this was a massive Excel sheet, like a gazillion rows and a gazillion lines, and I was the only person that could basically operate that sheet, because I knew that if on that tap I change that value, then everything starts to change, and then I need to do that. So it was absolutely not scalable. But I started working with that, and then remember I had those two columns. So I was literally just playing around with the graphs in Excel, and I selected those two lines and was just going over the graphs and hit on the scatter plot. I was like, oh, that's interesting. What is this? What am I looking at? Because all of a sudden I had the scatter plot with little dots. And it's one of these times when you see something and you gotta think like, what is this? What is it what I'm actually looking at? And I started, all right, so the horizontal scale is my metric of relative strength, because it wasn't called RS ratio or RS momentum at the time. That all came much later. So I saw that and I saw the momentum. Like, oh, this is interesting, because now this is all very strong and it's got strong momentum, and this is weak. So that was interesting. So I started playing around with that. But very soon it's like, because you gotta visualize this as a scatter plot with only dots, like a classic scatter plot with only dots. And obviously you want to know, because then you say, okay, so this is where it is now, but where was it yesterday or the week before? So again, back to my Visual Basic programming skills, trying to add the previous value. And then in the beginning, I only had the previous. So then I had a scatter plot with two sets of data. And I needed to make the second one as another color, basically to distinguish what was now and what was last week. And so it grew, and then I figured out how to draw a line between the two, and then we got the tail building, and then we had a bit of an idea of what was happening. And then when you made those tails very long, you could see that there was actually a rotational curve being built, which was kind of an aha moment for me, because like, hey, this is interesting, because everybody was always talking about sector rotation. And now this literally visualized the rotational character of the chart. That's when the picture started to build, basically.
Perfect. Great. That's a very, very interesting story. And, since you were talking about repeatedly going back to the drawing board, making revisions, trying new things, adding more layers to what you were doing, when was the last, most recent upgrade or most recent revision you made to the program or to the offering?
Okay, so the basis is still the same as it was basically when it was launched on Bloomberg in 2011, which was
Right.
also kind of shortly before that. But what we added since then are what we call the derived indicators. So these are things that you can learn from an RRG, and there's a few. For example, the tail length, the length of the tail. We figured out that the length of the tail, it tells you something. If the tail is very short, then there is not a lot of power behind the move. If the tail is very long, there's a lot of power behind the move. So that's one thing. A second thing that we've learned is that the heading of the tail is very important. And it's a bit hard to explain that into a podcast, but we'll do that in the webinar. We can talk about
But
it,
I
because
mean, that's what we have the webinar for over the
yeah,
weekend. So we
exactly.
will get into greater detail for those who want to, use RRG to the fullest.
Yeah.
But today it's more about, the big picture, the vision you've had, and continue to sort of, grow it, expand it,
Yeah.
and strengthen it, right?
Yeah, we're still learning. And every time we learn something about it, we try to figure out whether it makes sense or not. And that is an ongoing process. But the basic values haven't changed much. Not at all, actually, to be honest. What the maybe after that, because then at that time we had the static picture with the static tail, and Dave Keller used to be, he's a colleague of me at StockCharts right now, and I used to work a lot with Dave. He was at Bloomberg for a while, and he was a client when I was working on the investment bank at Fidelity in Boston. He was the head of technical analysis, and he was one of the people that I used to talk to. And when you're an analyst, you send your report, and then every now and then you get on the telephone with them. So I was on the phone with Dave, and talking through the report, and all of a sudden he tells me, he says, "Hey, Julius, that last page of your report, which was the the very basic rudimentary RRG picture with the dot and the previous. So it had only the last value and the previous value. He said, I always print that out and stick it on the wall. Dude, why are you doing that? It's a PDF. We've got computers. Why is that? And then he explained, and you remember, when you were in high school or in school and you were bored and you had a notebook, you would draw that little man at the bottom with a little circle and then a thing with 2 legs and 2 arms. You didn't do that? You don't do that in India? My God. So
Yeah,
you
I
got
mean,
the little puppet
something similar, yes.
and then on the next page you draw the same puppet with the hands a little different, and then on the next page you do that, and then by the end of the class you could
It becomes like
actually
a flip book.
yeah. So when you would do you would see the man, you would see him move, and he was doing that with the RRG. So he would flip it and he would actually see it rotating, and that led us to actually create the animation, and then it became a lot more visual and a lot more entertaining, and people could scroll through history and see how these rotations were taking place. So yeah, all these things are happening because of a discussion with someone, because something you read, because something you pick up, an idea that you have, and now here we are. So
great, that's an interesting story. In fact, you were saying that in 2011 is when you first launched on Bloomberg,
yes.
and approximately 13, 14 years since now, you're finally making an entry in India on an Indian platform, Strike. How did it happen, and how did you and Strike sort of partner and decide to go ahead with this?
Okay, so yeah, I mean, indeed, 2011 on Bloomberg, and then after that, a lot of things followed. And Siobhan reached out to me and asked, "Hey, can we have a chat on having RRG on the platform?" And obviously, that we are interested in those kind of things. And I've got to say, I have had more requests from India, but they never materialized until now. So kudos to Strike and the team at India Charts for really pushing through and working with us to make it happen. Because you still need to do a lot of stuff to actually get the chart on your system. There's a lot of data going in there, a lot of calculations, and then you need the visualization. You need to put it into your platform and sort of embed it in the bigger picture. And the team at Strike has done a fabulous job on that. So we're very happy with them.
Great. What about the Indian landscape? I mean, how are you assessing, or what is your sense on the Indian trading landscape as it is right now? And of course, we've seen the volumes really go up in terms of the participants, and of course, the trading volumes as well subsequently. But what is your reading of the Indian trading community as it is today?
Okay, so it's a bit far from me. I'm not super in grind. Obviously, I look at India, I look at Indian markets, but
But when you
it's not.
decided to sort of, venture into
Oh,
or
that's
foray
that
into
that
India.
no, that's easy. We all know that India is a booming market. There are so many people there, and the people that start trading or investing are. I mean, I've heard a story. I did a presentation in Mumbai for the CMT Association in 2019. And I believe someone that time told me that there was like 10 million new investors in India every month, which is like, for people in Europe, that's a crazy number. We to give you an idea, a bit of perspective, I live in Amsterdam in the Netherlands. We've got 16 million people in the entire country. So
Yeah,
it's like I
that's
don't
the
know.
kind of
I mean,
volume.
yeah,
Yeah,
I mean, what is Mumbai? Like 100 million people in Mumbai to start with, something like
yeah.
that. It is absolutely incomparable. So for us to be connected to India is super interesting. It's a huge market, and I'd love to have all these people use Strike and use RRG there for the Indian markets.
So, what should Indian traders or participants expect from RRG on Strike? I mean, it's always good to go in with the right expectations, right?
Yeah. So I mean, first of all, RRG is a tool, and primarily a data visualization tool, and that is that. So it's not a trading system. There is not a so a lot of people ask me, what is the performance of RRG? It's like, I don't know. I mean, depends on how you use it. So I always counter that. So what is the performance of a candlestick chart? You don't know. I mean, it depends on completely on how you use it. Someone someone wants to trade a 5-day breakout and someone else wants to trade a 20-day breakout. Some people use a 5-day moving average, other people use a 200-day moving average. Completely, same type of tool, but completely different outcome. RRG is no different. It's a data visualization tool, but the uniqueness is that you can visualize an entire universe on one picture, on one chart. So we use the tagline that RRG gives you the big picture in one picture. And it is actually what it is, because imagine if you have 50 stocks in the Nifty 50, and I mean, if you only look at the price chart, you need to flip through 50 price charts and you'll figure out like, oh, this is really nice and this is really nice and this is really nice. But how do they compare to each other? That means that you need to use relative strength on all these 50 charts. Start with the Nifty. So you do 50 relative strength analysis of individual stocks versus the Nifty, and you will be able to tell this stock is doing better than the Nifty or it's an uptrend versus the Nifty. But it's still 50 charts. And then if you have identified 10 charts that are in an uptrend versus the Nifty, now you want to answer what is the best. How are you going to do that? So as I told you, that numerical value is of no use. You need to have the trend. So what you actually, if you really want to do it right, and we're going to look at a picture that kind of visualizes that process on Saturday. But you would need to make a comparison between all these 10 stocks as well. Compare this not just versus the Nifty, but stock 1 is doing good and stock 3 is doing good. Now you need to compare stock 1 with stock 3 to figure out which one of the two is the best. And you can imagine that doing that with 50 stocks is a huge universe. It's a lot of charts that you need to flip through. And even then, you wouldn't have the complete picture in your head. And that's where RRG comes in, because it gives you that entire picture in one image. And with the tails and with the direction, you will be very, very rapidly, you'll be able to identify, hey, this stock is doing really well. It's doing a lot better than that stock. It's doing better than the index. So in one shot, you will have the big picture. And from there, you can start using, looking at the price charts, looking at your other relative work, look at, I don't know, Elliott wave counts. People have many, many ways of analyzing markets. And I've always promised myself, I am not going to tell someone else how they need to do their analysis. I remember very well when I was working on the trading floor, I would get a lot of salespeople, selling systems and software and stuff. And they would, all right, basically the message was, forget everything you're doing right now. What I'm going to give you is the best in the world.
Yeah.
Like, yeah. So we'll give him 20 minutes of my time. So, yeah, dude, thank you very much. Bye-bye. Sayonara. I never see you again. Because I knew what I was doing. I had my process. I had my way of doing things.
Yeah.
And I respect that everybody else has that. But the problem was always that you couldn't get that entire picture. And that is what RRG does. So use
So you're plugging a
RRG.
very important gap. Yeah.
Oh yeah, so use that picture, use that RRG and fit it into your workflow in a way that works for you. I mean, if you're a long-term investor, you probably want to look at a weekly RRG because it's looking at the long-term trends. If you're a swing trader or a shorter-term trader, you want to look at a daily RRG. If you trade intraday or maybe hold it for 3, 4, 5 days, you may want to look at an hourly RRG because it's a completely different form of trend. Imagine the fund manager at Fidelity who runs a 500 million investment fund. If he decides to buy some stock, he probably needs 2, 3, 4 days to build the position that he needs. So if the price comes down within a longer term uptrend, that's good for him. He wants to buy that. A shorter term trader may want to short that move because he's interested in the shorter term move. So it fully depends on what type of investor are you, what is your investment horizon, how much risk do you want to take. RRG is a tool to help you make those decisions, but it's not the holy grail.
But no matter the time duration or the end goal, the need to constantly self-educate and constantly monitor, track, and mine data. I mean, that's very important, right?
Oh
Whether
yeah,
you're an
yeah,
investor, trader, intraday, whatever you do.
absolutely. I mean, before RRG was there, well, there's still a ton of people out there who don't use RRG, unfortunately, but it's the truth. They have a screen full of graphs that are updating because they want to continuously monitor what's going on. And RRG is a tool for that. When I was back at the bank, and again, RRG didn't really exist. We had market makers, so the guys that needed to come up with bid and offer prices on the exchange that investors could trade on. These people usually would have to make a market in 15 to 20 stocks. Again, which is quite difficult if you have a position in 15 stocks and you're a trader on a dealing room, it's quite stressful. So what would typically happen is that because they were running the proprietary book of the bank. So what would typically happen is that they would have 3 or 4 bigger positions that they were really trading, and then the other 15 they just had their bids and offers out there, and if someone else hits their bid or lifts their offer, it was like they would put it in, they would look at that chart. What would happen is that sometimes all of a sudden something starts to emerge, or you get a big buyer in something, and then they start to take out the offers and they start buying that stock. If it was one of the stocks that the trader wasn't really looking at, he would constantly, his offers would get, and he would end up being short that stock because someone else was continuously buying it, maybe putting it in a position that he didn't really want. So what we did is we created, and this is all in Excel. It was thinking back of it is absolutely crazy, but we created an Excel sheet that would draw the RRGs, or sort of the RRGs. It wasn't really an RRG. That would give him that plot and show him where those stocks were on an intraday basis. And he would just have to look at that RRG and monitor it to see, like, hey, that stock is starting to move on the RRG. Let me see what's going on. And then it's kind of an alert system for him. He would go to, investigate the stock, what's going on, and find that, hey, there's this huge buyer there out there, and he could adjust his trading strategy. So they would use RRG as a monitoring tool, just as an overhead monitoring tool to figure out what's going on in the market on that particular time.
Interesting. Just, sort of circling back to what I was asking you. I mean, typically when one is a trader, there is a lot of noise. There's a lot of now, because of social media,
Oh yeah.
messaging groups, all of that. So you tend to also start hearing a lot of views from everywhere around you. Obviously, that's not the right approach for decision making. But my question is, how much or to what extent will RRG help in taking your own decisions independently in the market and not depending on any external people to sort of give you their opinions
Yeah,
and
that's the
their
whole.
views?
But I think that's the holy grail question. Probably depends on the user. I don't think RRG is. I mean, you could apply it to RRG, but you could probably apply it to any other method. I think it's the discipline of the user. How good are you as a person or as an investor to shut down from outside noise and just concentrate on your process? And we all know that the process is way more important. And the people who are disciplined enough to, first of all, have a process, because there are still tons of investors who have no process. They just, I don't know, click buy and sell randomly almost. So having a process is the first thing to get established. And then secondly, the discipline to actually follow that process and not get nervous when something goes not as you expected. So you have a security selection, you have a list of stocks that you want to look at, and then you have some levels or some events which you know trigger you to execute a buy or sell decision. And then you follow your money management rules, because that's another thing that's super important and a lot of people forget. Having a trade idea, whether that's coming from RRG or a price chart or a combination of the two, is one thing. But then you're going to buy. So how much are you going to buy? What percent of your portfolio are you going to buy the stock? Are you going to buy an option? If it's an index, are you going to use a futures contract? There's so many decisions. So even after the decision,
Yeah.
yes, I like this stock, I'm going to buy it. You still have a ton of decisions to take to make that position fit in your portfolio. If you have a $50,000 portfolio and you feel Nvidia is the right stock to buy, buying $50,000 worth of Nvidia is probably a bad decision. But buying $1,000 of Nvidia is probably also a bad decision because it doesn't make any sense. So there is a lot. I wrote an article a long time ago which had as a title was market analysis and portfolio construction are two different animals in the same zoo. So they are connected, but then again they're not, because they're two different disciplines, but you need them together. And RRG just fits in that void, fits in that area to help you come to a decision. But after that, you still need a money management model, trading rules, financing, stop loss, profit targets, whatever you want when you do trading.
Very, very nicely put. But let's say I am a strike user. I have
Yes,
subscribed to the platform. Obviously, there are multiple tools and offerings that
absolutely.
I
Yeah.
am getting as a subscriber. Now, add to that a layer of RRG. So, to what extent and how can I sort of leverage that to become more self-dependent with one-stop shop being, Strike being the one-stop shop? How can I really upgrade my game
Okay,
with
so
RRG?
yeah, so you can use RRG two ways. I call it one I call top down, and the other one would be bottom up. I prefer the top down because I see RRG as a high level tool that oversees the entire universe and helps you to zoom in on the areas where you feel potential possibilities are present. So I would use RRG first at a sector level. Just create an RRG that visualizes the sector rotation, and then it'll help you to pinpoint like, hey, these sectors are interesting. They are potentially moving in my direction. And then you zoom in and you go create a second RRG of the stocks in that sector versus the sector benchmark, which will help you. So let's say that, technology is a good example. So we look at the sector RRG and we see technology is a strong sector. And the next level is to look at the technology stocks against the technology sector. And then we will find the best stocks inside the technology sector. And as always, the end decision is with the price chart. So RRG helps you to find the right sector. It helps you to find the stocks in the right sector. And then you go to the price chart and you use your MACD, your moving averages, your whatever you as a trader feel like a good strategy to actually execute the trade and say like, okay, this is the one that I really like. The other way you could use it is if you have a group of stocks that fulfill some criteria that you have put, whether that's fundamental or technical, doesn't really matter. So you have a list that you're potentially interested in, throw that list on an RRG to see how it comes out on an RRG. And if you have stocks that are moving to that lower left-hand corner, to that lagging quadrant, you may want to forget them, and you want to concentrate on the ones that are moving into that leading quadrant or inside improving at a strong heading. So these for me are the two ways that I would use RRG to basically zoom in on the areas of the market where relative strength is improving, and then put it on a price chart, because ultimately you need to trade price. RRG is all about relatives. It will give you the stocks or the sectors that are outperforming or in relative uptrends, but in the end of the day, it's the stock that you need to buy or sell.
Perfect. Perfect. Thank you so much. And let's now move on to the final and the most important question. The webinar that we're hosting this Saturday, 15th of June, and of course, RRG and everything associated to RRG will be discussed. So all our viewers and all our subscribers who will be joining this webinar, what should they sort of expect over the two-part series of webinars that we've planned for them?
Yeah, so we will, I think we will kind of redo a little bit what we did in the introduction. So where does it come from? How did it build up? But then we will use the visuals. I will show you the early versions and the buildup of an RRG. We will talk about how you can read an RRG, what the quadrants mean, what the rotations mean. We will dive into interpretation. Remember, I told you it's not a trading system. There's no performance, but there are definitely some guidelines and some rules of thumb on how to read an RRG. What are strong rotations? What are weak rotations? So we dive into all of that. How you can use RRG in your investing. We will look at the top-down, bottom-up stuff that we just discussed, but we can make it a lot more vivid with the visual tools that we have on Strike. So yeah, I think there's a lot to gain there, and there's a lot to see also.
The best part, Julius, you're forgetting that you will also be answering audience questions live, right?
Yes. So if people have questions, then they should definitely tune in, and I hope someone is moderating because I can't talk and read at the same time, but
I will be there. And I will also, I'm really excited for this webinar. I would also personally get to learn a lot more. And guys, it's none other than the creator of RRG, Julius De Kempenaer, who will be joining us for this webinar on 15th of June, 5 p.m. in the evening is when we do the webinar. Julius will be talking us through the various, series of presentations he's put together. He'll show us live how to read an RRG chart. And of course, most importantly, at the end, he will be answering all your doubts, all your questions regarding this revolutionary tool. Thank you so much, Julius. We're all very excited for the webinar. Thank you for joining us today. And we look forward to meeting you once again on 15th, live in action for a chat.
I'm looking forward to it, Karunya, and everybody else. Please tune in on Saturday, and it's going to be fun for sure.
Absolutely. See you guys.